This is iBergamot with S&P 500 price movement analysis for the week of August 15, 2016. And this analysis is based on my proprietary Composite Score Indicator, CSI. Now, Composite Score Indicator is my proprietary formula to quantify and qualify price action of any actively traded security. Well, that was a tongue breaker. What it does, it tells you when the trend starts, it tells you how it progresses, and it gives ample indication of when the trend is over. Now, what it cannot do, it can never buy the bottom, and it can never buy the top. It just cannot do that. But whenever there is a trend, there will be a CSI signal which starts with big change. Here the indicator flipped to +9, so we have this big wide-ranging 5% candle that started this particular trend of 6/27/2016 in which we are right now. That was followed by the valid buy signal, and we've been in trend for 3 weeks, and this is a fine trend which satisfied all the necessary preconditions. Ever since we've been in a correction, believe it or not, this slight upward movement is actually a correction in a trend. There has not been any kind of a sell signal, not even a warning of a sell signal. Now I have to say that some sell signals can take up to 2 weeks to develop, so the price can come down quite a bit before the sell signal is registered. The presence of CSI trend does not guarantee that the position will be profitable, but it gives us pretty good opportunities. Like this particular trend has been about 10%, and it's clearly half of it, about 5% of it, can be taken out with the trend with absolutely zero stress, no guessing. You just exactly know where you are. As a matter of fact, I have a running position in double long S&P 500 ETF in SSO, and even when this trend will finally end, I will most likely not sell it, waiting for the continuation of the larger trend. Now, as far as the larger trend goes, don't worry, I'll explain this in a second. This line is just S&P 500. The rest of it is 9 sectors of S&P plus real estate. In here, in a color-coded map, I have in blue color buy signals. In green color, there is a trend. In yellow color, any kind of a sell signal, correction or warning signal. Brown are the sell signals, sell 11, sell first 9, and off, that means the trend is over. White squares just mean nothing. Not every price bar is supposed to carry meaningful information. This indicator is weekly, and it can stay off for a period of time. Believe me, it can stay off. It goes off and it stays off all the way through the bear market. I've seen it happen already. The interesting thing is going on in industrials and XLI. See, XLI had one sell signal, sell all 11s. That means that indicator was at 11, and 11 is well, there is a whole theory behind why you need to sell 11s. I'm not going to go into it right now, but there is a sell 11 on the week of 7/11, and now there is another sell signal, sell first 9. There is also a rule about that on 8/15. Now let's take a look at industrial. So this is a week of July 11, and sell all 11. What you do is you basically sell the close of the weekly candle, or you sell the whatever pop you're going to get next week. Now this trend has never gone off, so it's still on, even though 11 is an exhaustion candle. You can clearly see this thing moved. This little retracement did not register any kind of off signal. So this is the second sell signal at almost exactly the same price level. I think it's noticeable that industrials tells us to get out twice. Twice it given us the opportunity to get out, and a careful operator surely will listen to the warning. Nevertheless, I think we have a beginning of a big, this is the same industrial sector, 1 year with the long-term moving averages and Keltner bands. I would say this up move just started. I would say this up move just started. I mean, all this has been just getting out from the base. This is just getting out from some kind of a base. And now we broke out. And what happens next? I don't know. I mean, it's possible that the ETF will retrace somewhat and then rally to new highs, or maybe retrace just a little bit, rally a bit, and then collapse somewhere into like November election or something. See, I don't know the future. Any one of these scenarios is possible. I mean, it's possible that this thing will just keep on going in a slow moving, low volatility kind of a trend. That's why I use composite score indicator. It tells me where to buy, where to put a stop, where to sell. And after this, I mean, we can look at this level of $59 and say, you know what, everything is above it is a gift, and everything below it, we need to be out. We've been told twice to get out. We need to be out. Please come back next week. In the beginning of the week, I will be doing these market movement videos, which will be all about S&P 500, its sectors, my analysis based on composite score indicator and some other goodies. Hopefully will provide some kind of a slightly different perspective on what's going on in the markets right now. Thank you for watching.